Every day in the stock market news, we hear about Sensex and Nifty either rising or falling by so and so points. From that, we assess the performance of the market. Now the question is, what is Sensex and what is Nifty, and why it is considered as the benchmark? Let's get answer for all these questions in this video. In India, primarily there are two stock exchanges. One is Bombay Stock Exchange called BSE. The other one is National Stock Exchange called NSE. BSE has an index called Sensex. It is a short form of sensitive index. In NSE, we have an index called Nifty 50. In short, it is called Nifty. Now, the question is why we need an index for a stock exchange. If you consider BSE, there are around 5,000 companies listed. In NSE, around 1,000 plus companies listed. So, if you want to get the performance of that index in a particular day or for a particular period, we can't go and assess each and every company out of this 5,000 plus companies or 1,000 plus companies, right? So, in order to get the broader picture of what is happening in the index, out of the 5,000 plus companies in BSE, some 30 companies are cherry picked and they form an index called Sensex. In the same way, in NSE, out of the listed 1,000 plus companies, 50 companies are cherry picked and an index is formed that is called Nifty. Now the question is how 30 companies and 50 companies are shortlisted for the benchmark index. There are multiple criteria around that. Let's see them. The first criteria is free float market capitalization. Free float is nothing but the number of shares available for the public to trade. In order to understand this, let's take the company Infosys as an example. Assume that there are only 100 free float stocks available in Infosys. That means the 100 stocks are available for public to trade. And if we consider the price of single stock is 2,000 rupees, then the free float market capitalization of Infosys is nothing but 2 lakhs. That we got by multiplying the number of free float stocks and the price of each stock. Generally, stock exchange do the calculation of all the listed stocks and they categorize the stocks. Whichever stocks having the market capitalization more than 20,000 crores are considered as large cap stocks. So if you consider NSE, out of the listed 1,000 plus companies, I would say more than 100 plus companies satisfy this and they are considered as large cap stocks. In that 100 plus stocks, they do consider other criteria like corporate governance and the performance of the stock and multiple other filtrations they do. Also, in India, if you see, there are 14 major sectors like financial services, information technology, oil and gas, FMCG, automobile. So, all the companies from these major sectors are considered to be part of Nifty 50. Then only Nifty would be the true reflection of what is happening in the market. So now we are seeing the heat map of Nifty 50. It has all the listed Nifty 50 stocks. Heat map is nothing but it just shows the day-to-day price move of a particular company. But we are not worried about whether it is red or green. Here we are interested in seeing the space allocated to a company. If you see Reliance, it has very big space allocated. And if you see L&T, it has a smaller space when compared to Reliance. If you see BPCL, that has the smallest space. Here, this heat map is based on the market capitalization of Nifty 50. That is nothing but the weightage. So if you see the left side, the Reliance, HDFC, ICICI Bank, Infi, HDFC, TCS, ITC. So all these stocks has major space in this heat map, right? That means any change in these companies would have a bigger impact on Nifty because the weightage of these stocks are very high. If you consider BPCL, even if it goes up by 5% or goes down by 5%, it wouldn't have much impact on Nifty because the weightage of BPCL is very much less in Nifty. But if these stocks, whatever the Reliance, Infi, whatever we are seeing on the left side, if these stocks moves up, there would be good chance that Nifty also behaves in the same way. Either it would go up or go down along with these stocks because the weightage of these stocks are higher on the index. Now we know what is an index and we have fair idea about how the constituents of index are shortlisted. So now the next question is, if Nifty 50 has 50 stocks, will it be the permanent list? The answer is no, because the stock exchange do a periodic review of the constituents of Nifty, say every 6 months. So every 6 months the stock exchange do the review of the stocks listed in both Nifty and Sensex. And if they find any stock is performing poorly, and also if there are any corporate governance issue or any other external factors, then they would consider replacing the company with a different company. And in that case, they would give 4 weeks notice to the general public, either through press release or through other medias available. So now we have fair idea about what is Sensex and what is Nifty. The next question is there a way to invest or trade in index? The answer is yes. And also here we have to know about a fact. The Sensex always has very low volume and very low amount of liquidity. So the Sensex is not a tradable instrument. On contrary, Nifty always has very good amount of volume. Nifty can be considered for both trading and investing. So if you want to trade in Nifty, there are multiple avenues available. We can trade on Nifty futures or Nifty options. If you want to invest in Nifty, index funds and exchange traded funds are available. We will see about futures, options, index funds and ETFs in a separate video. Thank you.